Good morning, America. Thank you for watching Taxes Made Easy, either live or on rebroadcast. And we've got a lot of information today to cover. There's a lot of news, and really going to focus on how it's going to impact you. Um, we have Hurricane Helene that happened. We have strike that just started last night. And now they're talking about a possible strike on the West Coast as well. So again, if we have strikes on the East Coast and the West Coast ports, that's going to be a real stranglehold on the American economy. So again, it's some pretty scary stories out there, big news. How do we weather it? How do we prepare for this? We'll talk about that as well. So again, stay tuned, and we will be right back after this next break. Good morning, everybody, and very excited for this show today. We've got a lot of news, a lot of interesting things to cover, and again, the goal here is to be informative and present facts and stories so that you can decide the best way to move forward for you and your family. So the first article is going to be just very quick. Tim Walz, J.D. Vance meet in New York City for presidential debate, which is tonight. What are they going to say? Who knows? I don't like going through all the talking heads to see what they're going to say. What do I want them to say? What should the American people want them to say? Details. Explain what your stances are. Explain what you or your party is going to do if elected as president and vice president. That's what we should get tonight. Let's see if it's just more mudslinging or again, if it's more just fighting with the moderators, who knows? So if you don't watch tonight, I don't plan to watch tonight. I have something that I have to go to tonight. But read the highlights because we should be paying attention to what our political candidates are saying, in particular what their policies are. What are they going to do instead of just calling the other person, tearing down the other party. So again, this is going to be the last debate that I know of going into this election. So a quick article here from changing gears from the EPA's list of plug-in hybrids, and this is from Car and Driver, eligible for the federal tax credit. Now these are brand new vehicles, so it's always nice to get a tax credit, but they will probably cost you a lot more than the tax credit of $3,750 or $7,500, and there's only one vehicle that qualifies for the $7,500, and that's the Chrysler Pacifica plug-in hybrid. So again, they have the Ford Escape, they have the Jeep Grand Cherokee, and these are all 2024s eligible for this rebate. If you're out looking for a car and you're considering a hybrid, you might want to look at some of these vehicles and get that tax credit if that's the tipping point. But again, hybrids are really becoming popular, and we're going to talk a little bit more about them later. But again, EVs have kind of waned as far as being the hot new thing, and a lot of people are going to hybrids. So if it works for you, great. Next is the IRS put out the statement today, extending relief to farmers and ranchers impacted by drought in 41 states. So again, this is particular though to farmers and ranchers. I cannot emphasize that enough. But if you fall in that where you have, it applies to capital gains realized by farmers and ranchers on sales or exchanges of livestock held for draft, dairy, or breeding purposes. So other sales of stock raised for slaughter or held for sporting purposes or poultry are not eligible. So it's a pretty narrow definition. If you are a farmer, you do raise cattle, talk to your CPA, look into this. This came out yesterday, pardon me, to help out farmers due to the drought over the last 4 years. So, and these are, again, I'm not going to get more into the details, but it's important there for ranchers and farmers to know about this. Um, Another notice from the IRS, and I want to highlight the timing here. So this is storm victims in Illinois, and again, they're getting tax breaks. Dates put out till February 3rd. Give them some more time to comply. It still means you need to comply. And also, if you're behind on your estimated tax payments, it gives you some time to get caught up. Pardon me. But it doesn't, you still have to pay them. So this relief is for Cook, Fulton, Henry, St. Clair, Washington, Will, and Winnebago counties in Illinois. So if you're in those areas, be aware of this. Now, again, with Hurricane Helene that just hit and it caused massive destruction throughout the southeast, they'll get something as well. I mean, but Helene is now being compared to Katrina as far as the devastation that it's caused. So again, let's see what happens. Hopefully we can get them the relief that they need in those areas, which will come. But it talks about one of the things that mentioned here. This happened months ago. So July 13th, 2024 is when this hit. And now we're in October 1st before the IRS gets the announcement. So there's going to be a lag time between when the IRS announces the relief they can offer and when it actually happens, or disaster actually happens. Part of that is they have to determine which counties qualify in what states. And again, storms don't really pay attention to state lines, of course. So just be mindful that even though something isn't announced right away for Helene, it will come for the victims of Hurricane Helene. It will come. It'll just be a little while. So this is an interesting article here. And this is from a New Jersey storm, Ida, that happened. And really focus on Milford Leanna Jones. And this is talking about getting help to people that are still struggling after 3 years of being hit by Hurricane Ida. So the New Jersey legislature passed a measure in June to help property owners that still couldn't return home after 3 years, but the governor vetoed it this summer. This was a bipartisan bill, and so again, it goes into the details about, in an interview with someone, she's talking about those of Hurricane Helene, they don't know what's coming, and I just hope that there's more support there than we have seen as Hurricane Ida survivors in New Jersey. So the damage lasts for years, dental bills, medical bills, all kinds of other bills. And here's the key thing. This struck me. On top of learning how to budget recovering from a flood. This is something Americans are not good at, is learning how to budget. And if you are not budgeting now, if you're not planning for the future, if you're not creating and building on 2 to 3 months worth of savings, I highly encourage you, because this is something, she hasn't been in our home for 3 years. And so this is the whole purpose of the bill. And she, as well as other survivors, spoke before the New Jersey Senate committee back in a new revised bill that would allow them to put their mortgage payments on hold for a year. They're living elsewhere. They can't even live in their homes because of the devastation. And again, every time they're worried about whether or not their home will be ruined again every time it rains. So why did the governor veto it? He wants them to meet stricter rules to be eligible. Opponents of that claim that it'll be so stringent that few, if any, homeowners would even qualify. We'll see. But again, this is local government trying to find a balance between helping people out and just giving money out. So again, I'm not going to dive into the politics of that. I'm not an expert in local New Jersey politics. but I do think it's important to highlight what's ahead and what people have to deal with as they deal with emergencies. I worked with someone, it was last year, um, maybe it was the year before, I forget, but his entire home was destroyed, and he was a realtor. So not only was his home destroyed, but all the homes in the region were destroyed, and it would take years to rebuild it. So he had to move to a different area of Florida that wasn't destroyed, restart his realtor business from scratch, because everybody he knew and all the connections he had in his own place were gone. Everybody left. And it would take years to rebuild it. In that period, he had no way to make money and to support himself. So again, it can be, the damage can be long term for many people as they try to recover from things like this. So continuing the conversation, consumer confidence. While it's not actual production, it's not hard numbers, it is indicative of where people feel like their economy is going. And this is not a good number. This is not a good thing with people just very worried about the economy, people worried about their futures, job security concerns, and a weakening labor market. So again, we've had a lot of bad news about the labor market. Unemployment has been going up. And when the Biden administration admitted that they 818,000 jobs that were reported as job creation were never created. And so this is settling through. And it's interesting that this article mentions some contrary information here, but they don't cite any facts for it. So again, U.S. consumer confidence took a sharp dive in September, and it fell to 98.7. That's just how they measure it, from 105.6 in August. So that's a huge drop, the steepest drop in just over 3 years. What happened 3 years ago? COVID. And we were still coming out of COVID. And so huge drop in confidence back then. Again, we're seeing similar concerns here. And part of the problem here is they're more pessimistic about future labor conditions, less positive about future business conditions and future income. So if taxes go up, and inflation continues to go up, I know most people are holding on to their money. They're trying to do what they can, and the concerns here is that it will affect the consumer confidence. Really reflects weakening demand, and our economy is built on a consumer economy. So I was looking for that. The risk of recession also weighed more heavily on minds of consumers in September. So if people aren't out there buying stuff, plans for big ticket purchases are being put on hold. It has a huge effect on our market, and I'm out of time, so we'll finish this when we come back. Welcome back, everybody, and just want to wrap up this last article about consumer confidence. One of the things we've been talking about is the importance of saving. So again, they kind of go back and forth at the end of this article about consumer confidence also clouds the outlook for consumer spending, a key driver of the U.S. economy. Though it could help keep inflationary pressures in check if people just don't have the money to spend, or if they start holding on to their money. What drives me batty is nowhere in this article is savings even mentioned. And again, the talking heads at all the different news stations, now this isn't a news, Epic Times reporters, they're so focused on American people spending rather than saving and helping drive investment, innovation, and people saving for the future. But that's the problem, is that by cutting interest rates, the feds have just hurt the incentives to savings. And so it just, what savers need is um, they need to know what to expect. They don't need an economy that's going up and down and up and down. Where they need to know that the tax plans and the economy to grow at a steady, even path, and that's what's happened in the United States for most of its history. The last 15 years really have been very crazy, um, and have been distorted one way or the other. So again, let's see what happens moving forward. But we should be not focusing on consumer spending, but focused on saving. So, personally, I highly recommend that you do the same, because that's one of the concerns when you don't have money, you don't have savings, emergency funds, you don't have 3 to 4 months of income set aside just for emergencies. When life happens, which it will, you'll be completely unprepared, and then you'll be begging the government for help. Doesn't always happen. So again, this is an article from The Hill. It's an interesting take on Republicans, why they're backing the SALT reversal or changes to the SALT tax. So the SALT tax is state and local tax exemption. So historically, taxpayers in most, typically blue states that have much higher state and local taxes would get a full deduction on those. And essentially the red states will be subsidizing the blue states. So when the Republicans took charge and passed their tax plan, they said, well, let's cap it. Let's limit how much we'll subsidize them, and they capped it at $10,000. Again, Democrats hated this from the start, openly opposed it. Chuck Schumer has has lambasted this and just really hates it. So why are Republicans starting to go back and forth? Well, this picture is of 3 New York Republicans, all running for re-election. It's about control of the House. Whether or not this is a good idea, I would say if we're going to cut taxes, let's cut taxes for everybody. And if people, personally, my thoughts are that if you don't like the high taxes in your state, vote for somebody else. Why should Oklahoma be subsidizing New York? It just doesn't make a lot of sense to me. But you have Republicans in the House from all over the country, and from, if they lose the Republicans in blue states, or if the Democrats lost their Democrats in red states, I mean, they would never control the House. So it encourages parties to keep in mind the needs of blue states or red states, depending on your political affiliation here. So that's why they're looking at this. Trump earlier signaled that a reversal in the SALT deduction cap would be warranted. He vowed to get SALT back. Why did they pass it in the first place? Well, to pay for a lot of their spending and the tax cuts that they proposed. But now if you take it away, again, that's more, if you get rid of, if you increase the SALT deduction or get rid of, make it so that you can fully deduct state and local taxes, it can definitely help a lot of people, mostly in high tax states. The argument for the beginning was to get the federal government out of the business of subsidizing states and helping some states out more than others and treating all states the same. But again, due to the policies here, they're really seriously considering getting rid of it or modifying it. And there's a lot of people campaigning for that. So again, interesting to see a very big reversal on that in just a few years. So actually, I wanted to cover one more thing here before we move forward.
Breaking news overnight: port workers from Texas to Maine
and I'm not
now
even sure why
officially
this is
on
talking.
strike, walking off the job at midnight. Now hanging the balance. Fox Business's Lydia Hu is live in Elizabeth, New Jersey right now in the middle of one of the picket lines.
Okay,
Lydia.
so sorry about that. I have.
Yeah,
The next article started running. Before we move on, I do want to talk about one last issue that's at the end of this article. And it talks about the salt tax deductions. It goes on and on about that. But towards the end of this article, that's where it talks about taxation of partnerships. So it's buried in here. So the IRS just put out an announcement, which we're going to touch on next, that they're going to demand more, they're going to scrutinize partnerships even more. And this could be a huge part, another thorny issue to deal with as they talk about tax issues. So the beefed up IRS has set up a entirely new tax division for going after partnerships and pass-through. And the IRS states the reason for that is that they have audit rate for large partnerships has dropped less than the 0.5% since 2007. It's never been high. Usually it's below 1% for all kinds of audits. And they say 80% of audits don't find tax compliance, which that's a funny way of saying they find something wrong when they do an audit. Usually could be minor. Doesn't say if it's minor or huge. So I would take this with a grain of salt from the GAO, Government Accountability Office. But they're arguing that they need to audit a lot more. And again, jumping to the last article we had here, or the next article, is the draft that I was just talking about. So yesterday, if you have a partnership, be aware of this new form, which you need to prepare and file with your tax returns. So this is to make sure that all property, anything that a partner takes from a business is reported and counted as income. So it's kind of yes, anything they take from the business should be counted as income. But I guess there were sometimes they would take property or other things as a partner. But again, it's just another form to go after, and if it's not completed fully, to audit and scrutinize the dealings of partnerships. Rightly or wrongly, this is just a brand new thing that came out yesterday that the IRS, that partnerships need to be aware of. Make sure your CPA is aware of it. Again, this is brand new. So, want to jump to the video here, and it's actually kind of interesting talking to a port worker here. So their argument is that they've taken less than they deserved in the past. Right now, seaports, as of midnight last night, seaports from Maine to Texas are impacted by the strike, the longshoreman strike. So the entire East Coast, the entire Gulf Coast, and scary enough, some people are talking about striking on the West Coast too. Now, if you want to talk about holding the nation over a barrel, if both coasts strike at the same time, it's going to be really hit our economy hard, especially if there's any kind of prolonged strike. So let's watch this video. They talk directly to one of the longshoremen and get his opinion.
Breaking news overnight, port workers from Texas to Maine now officially on strike, walking off the job at midnight when their contract expired. 43% of the nation's imports now hang in the balance. Fox Business's Lydia Hu is live in Elizabeth, New Jersey right now in the middle of one of the picket lines. Lydia.
Yeah, good morning there, Maria. What we are seeing unfold just behind me is really historic. This is the first strike of East Coast port workers in 47 years. And we are now able to talk to some of the members like Joe Biscara, who I'm pleased to say is joining us right now to get us a better understanding of what some of the issues are that the workers are advocating for yourselves. Joe, thank you so much for sharing your time with us.
No problem. Thank you for having me.
So, Joe, one of the issues in this labor negotiation are the wages. And just yesterday, your union rejected an offer of an increase of 50% over 8 years by the employers. Joe, that sounds like a tremendous increase. And I think a lot of people hear about those wage hikes and they think that's a lot, that's awfully generous. But you say you guys deserve it. Tell us more.
Well, I started 27 years ago, and my wage has increased only $25 over the 27 years. So to me, I believe that we've taken less than we've got deserved in the past. So now it's time.
And you guys say that you're looking at what the shipping companies are making around the world using ports like right here in New York and New Jersey, the largest port here on the East Coast, and you guys feel like you deserve a slice of this?
We are just looking to be paid fairly and for the goods we take care of every day. And we did not stop during COVID, and we don't want to stop right now.
Yeah.
We are willing to go back as soon as they decide that they'll give us a fair contract.
And tell us, what does the fair contract look like? If it's not 50%, what is it?
What's fair is whatever my union president is willing to negotiate to. But to be lowballed, he's not gonna agree to that.
Automation is also a core issue in this negotiation. What is it about automation that concerns you?
We want to protect our jobs. We want to protect our jobs for the future. We want to make sure that everybody will have the chance to make a good living working down the port.
Yeah. How long are you guys going to be out here?
As long as it takes.
Thank you, Joe, very much for speaking with us. Maria, they say they're going to be out here as long as it takes. This is day one. The estimates for the impact on the economy as the East Coast and the Gulf Coast shut down now for container imports and exports between $3.8 and $5 billion per day. So major impact on the economy could unfold. We talked to the ports just yesterday. They say they already have 6 vessels anchored outside of the port here in New York and New Jersey, and they expect that number to climb. Maria, I'll send it back to you.
All right, Lydia, thanks very much. Lydia Hu in Elizabeth, New Jersey. This strike could reportedly cost the economy, as you just heard, up to $5 billion a day.
So there's a lot going back and forth here. And again, we said 27 years ago he started. His wages only increased $25 over 27 years. A lot of people are asking, hey, is it sufficient or not? I was trying to pull up some statistics on it. They're all over the place as to what's fair. So my advice, and this is what I'm talking about, is as consumers, go out and stock up on necessities. Have that preparation, have money set aside beforehand. We thought toilet paper was an issue during COVID. It could very well get a much bigger issue, especially if you're on the East Coast. And I'm not saying raid stores or anything like that, but now would be a good time to stock up. A lot of Walmart, Costco, a lot of big companies have been stocking up in anticipation of this. This isn't brand new, but again, as long as this strike lasts, it's gonna hurt. It's gonna hurt economists. The economy is gonna hurt consumers, and expect prices to go up. So this could have a huge inflationary pressure at the same time. Again, whether or not 50% is fair or not. So the latest offer was 50% wage increases over 8 years, as well as tripling employer contributions to retirement plans, better health care. But the concern about automation, that's one of the big concerns out there. If we don't automate, we're not going to stay efficient and competitive with other ports throughout the world. It'll cost more to import goods. So there's pros and cons here, and what's going to be accepted. Again, we'll see. President Biden does have the authority to do an 80-day cooling off period and force the union to go back to work during that time period. He probably will not do that. He said he won't do that. And again, they're making this stand now to protect their jobs from now into the future. And they haven't struck for or done a strike for since the 70s. So from Freight Waves. Now this is not fair.
Workers from Texas to Maine now officially on strike, walking off the job at midnight when their contract expired.
Sorry, the article
43%
started
of
up
the
again.
nation's imports.
Jumping to the next article, and this is from Freight Waves, so this is an industry article. But again, this number 200,000. When you look up average pay for dock workers, it's all over the place. So if you're in the union, you have higher wages. But this article is biased against the union. I'll be the first to say that. And this is focusing specifically on union dock workers with the ILWU. And so again, they're talking about they need massive pay increase as well. This is from Los Angeles, Long Beach to Oakland, California, Seattle, and Tacoma, Washington. So pretty much the other side of the country looking to, they're not saying they're going to strike, but they're demanding wages and benefits. Now's the time to do it, I guess, especially with the East Coast being blockaded. So again, it's full-time registered longshore workers earned just under 200,000 in 22, not including benefits. And then they have a nice chart here showing average salary by profession. And of course, they have union up here at the top, and foremen making over 300,000 a year. To be fair, if you're not making good wages on the West and East Coast, these are especially New York, New Jersey area, these are the most expensive areas in the country. So if you're not making 200,000 and you're living in California on the coast, you're not doing so well. And it is very hard, difficult work. They work in all weather types. Again, their accidents happen when you're dealing with large machinery. And again, I do sympathize with the workers to that extent. So jumping to this last article before we run out of time here. If you just look up Indeed, you look up other sources, dock worker salary can be as low as $20.61. This might be non-union. And they're saying the average salary, again, this has the highest paying dock workers. Getting into the union is a very different thing, though, than going and working. So again, what's accurate as far as this gives an average salary of $50,000 to $64,000, looking at different job sites. But if you look at the union wages, it appears to be much higher. Again, there's all kinds of articles going back and forth saying where it is. So again, people with better knowledge than I, if you can opine on that, that would be helpful. We're going to be right back after this next break and wrap up our show. Welcome back, everybody, and really want to focus on how to prepare your business. And one of the comments there is learning to budget. So again, this was the gal that went through Hurricane Ida. Her home was ruined. It's been 3 years. It's still damaged, and every time it rains, it could ruin the house again. That's scary stuff. Very scary stuff for Americans struggling years after a natural disaster to repair. And I've visited people in New York after the big hurricane. I don't remember the name of it, but went through and just flooded basements, feet of mud in homes, and it was just a huge cleanup problem. Left a lot of issues for people to deal with. So again, with Hurricane Helene hitting, be very aware, look for ways to help out. Let's pitch in together as Americans to help people move past these natural disasters. How do we prepare for this? Budgeting, good financial planning. That's the only way to really plan for what life will throw at you. And life will throw curveballs at you. It's reality. Doesn't matter how much you prepare. Doesn't matter what you think. But being prepared is the best way of making sure that you can ride these crazy waves of life without any issues or with minimal issues. So budgeting, I cannot say that enough. I'm meeting with the financial coach later to have her appear on the show and talk all about budgeting, preparing for disasters, paying down debt. This is why I harp on savings. Getting away from this consumer economy and going against the grain. So same thing holds true for businesses. If you're not budgeting, if you're not planning, the famous adage that if you fail to plan, you plan to fail. It's especially true with businesses. So if you don't have a budget, if you aren't building savings for your business. So what I highly recommend, there are plenty of financial coaches that will sit down, look at your situation, and help walk through month to month what needs to happen and how to improve your business planning and strategy. So sitting down with a financial coach can work wonders, but also to do that, you have to have good numbers. And you'd be surprised how many business owners don't know what they make. They don't know what their costs are. They just go and they work. There's money left over at the end of the month in their bank account, and they think, okay, everything's great. But if there are unintended expenses, if taxes go up, the penalties on taxes go up, which happened this year, and you're not prepared for it, whatever extra money you think in the bank can be gone very quickly, and that leaves you and your business hurting and struggling. So first thing is have good numbers. That's best advice I can give people is, first of all, know what's going on with your business. How do you have good numbers? Having good bookkeeping. So you can use a program. You don't have to hire a bookkeeper, but you have to have someone in your office that can manage the books. Make sure if you're using Intuit, QuickBooks, there's plenty of other services out there, that you're using something that pulls all the information from your bank accounts and gives you good information that can be put into a profit and loss statement that you can look at least. Sorry, I'm not sure what's going on with my screen, but it's at least monthly. And you should be looking at those numbers monthly to see what's going on, how to move forward, and how to prepare for the future. So having good bookkeeping is step number one. Step number two, getting good tax advice. Knowing when new tax breaks or new responsibilities come up. One of the big things, and I'll probably do a show just on this, is the corporate tax, the CTA, where you have to go and provide the personal information for your business owners. You don't have to make that information public. I do work with CPAs and professionals that are reporting that information, and they're doing it in a way that's not exposing your personal information out there to the world. So making sure that you're up to date on tax issues and changes. Also, one of the things I've harped on a lot is making sufficient estimated tax payments. So again, the penalty this year was increased from 3 to 8%. I can't tell you how many businesses are going to get hurt by that because they don't know. And again, this is from CPAs years back, where inflation was low, but people were getting a good rate on their investments. And it made sense. Just hold on to your money, pay the IRS, and you get dinged for a 1% penalty, etc. But now that inflation has skyrocketed up, the penalty from the IRS has also gone up with it. Now it's 8%. Very few people are getting 8% annually from the market. So it absolutely makes no sense to hold on to that money. Things have changed, and we have to make adjustments as things change. So, number one thing, have a good bookkeeper, have good numbers. Number two, you take those numbers and you sit down with the CPA and plan out, so you can look at what are you expecting for your tax bill. So you can look at your prior year's return if it's fairly consistent, but also you should be planning moving forward and this is what there are CPAs doing this, where they sit down and they make sure that estimated tax payments are being paid. They make sure that their clients are up to date. It is costing a little bit more money, but it makes a lot of sense for people needing assistance. So when you're running a business, have some savings. So you have to build up savings for rainy days. If there's an unexpected tax bill, if there's any kinds of issues, you can just pay it rather than pay large interest fees when life happens, something happens. So again, get a bookkeeper, get a CPA, build a savings, have a savings plan to pay down debt. Again, there's healthy debt, but right now with interest rates so high, the best debt out there is SBA debt, but be very careful of that. So look at different ways to finance a company that goes with savings and debt options. If you're doing a startup, there are still SBA loans out there, and they're not that difficult to get if you qualify. So again, it's one of those catch-22s where taking on SBA loan debt, which is again still very historic rates, great terms, 30-year terms, can be very helpful to your business. But at the same time, if something happens to your business, it could put you in a horrible situation. So be very mindful about taking loans, too large of loans. If you have questions about SBA loans and the options and how that could affect you, give us a call. We give free advice all the time, or talk to a loan professional that's not just trying to sell you the loan, but that will fully inform you as to your options and what to expect down the road, because it's easy to get excited about something. I'm going to launch this project. I'm going to get this cheap funding. Be aware of what's happening down the road. So the threshold really is $200,000 if you want to protect yourself and your ability to walk away from the debt. If you get sick, life happens, the business crashes, and you can't pay the loan back, be very careful about going over $200,000. So, and there can be other consequences to that, as well as IRS policies change. So if you have bookkeeper, CPA in place, you have a good savings and financing strategy. If that loans could be part of that mix to finance your business, but ideally having those savings built up can be absolutely crucial in weathering storms for your business. The next thing, corporate attorney, and I'm already talking to someone that's going to be coming on the show shortly. If you haven't ever talked to a corporate attorney, it's past time that you do. Yes, CPA can set you up with an S Corp, C Corp, and get the basic function sitting there. But to really save money and plan for eventualities, that's what the corporate attorney really does. So it helps with succession planning, helps you plan, to take advantage of tax breaks, and sets you up through corporate planning and then estate planning, so that when life happens, you're taken care of. Now, one thing I want to mention with the CPA, not all CPAs do this. Sometimes you have to talk to a financial advisor. But when you're talking to a CPA, you should also be getting someone along that is a tax planner or tax advisor. Why? Because they'll look at your business and they'll offer suggestions, different retirement packages, etc., to help you save money and your employees save money on taxes. So right now is a great time to be putting money in a Roth IRA and setting up other investments for you and your employees. There are a lot of tax savings that can be used. There are savings for your life insurance policies that you might provide, other benefits such as healthcare. And there are group plans out there that are affordable, or they try to make them affordable, especially if you have over 10 employees. That's kind of the threshold. You go over 10 employees. You could provide a lot more benefits to your employees, make it easier to attract and retain employees long term. And really, that's what's going to help you build your business. Now, what happens when life happens and you get surprised? It happens. If you're prepared, it should be a lot easier to handle most surprises. But if something happens that you don't think is fair at the IRS or with state taxes, that's where you would reach out to someone like us. Or if you get hit with the big tax bill that you just can't happen. Something happened, COVID, other things, you sold property, you had a huge gain, but now you have a tax bill that you can't deal with, or you're getting audited and it's a little too complicated for your CPA. When you have legal issues that arise, that's where you might want to have a tax attorney working hand in hand with the CPA, or make sure that if you owe taxes and you're dealing with collections, that you have a tax debt specialist on your side. So that's what we specialize in, is tax debt resolution, negotiating directly with the IRS and the state. So I have a business I'm representing right now, payroll liability that they fell behind on, and it's a few $100,000 debt. The IRS is not getting easier to work with. Right now, we've checked all the boxes. We provided everything the revenue officer has asked for. We submitted for an installment agreement, and that was about a week and a half ago. We've been following up with him. Why hasn't this been approved? Why hasn't this been approved? You know, what do you need anything else? And they came back and tripled the amount of the initial payment that they're asking for. And I just said, look, give me your manager. Turns out the number we were given the false information twice, which is why the managers never reached back out to us. And so we're going to be appealing the case over the revenue officer's head, and also filing a report against the revenue officer for giving us false information. And so this is the frustrating part, that when you're dealing with the IRS, you expect to be treated evenly, fairly, and professionally. That's your right as a taxpayer. Now, there's a taxpayer Bill of Rights that is part of the IRS code. And again, the IRS should be held to account for that when they fail taxpayers. This is something that's a big thing. Even Taxpayer Advocate has advocated that people use this to actually go after and sue the IRS, because the lapses and violation of taxpayer rights have been frequent and growing in frequency and magnitude. So again, this is something that just happened yesterday. I was dealing with it yesterday. It's a very real thing that's affecting taxpayers. So if you need someone in your corner to fight for you, find a tax expert. Again, shop around, get a few opinions. And if you're confused, because this can all get very complicated, I just listed out 1, 2, 3, 4, 5 possible experts that you should be using. And I want to break that down, because I started off with a bookkeeper. You should always have bookkeeping services or some kind of program that you're using for bookkeeping. That's something you should be doing constantly. While working with a bookkeeper, you could be working with a CPA firm that does the bookkeeping and the tax preparation. But you should be meeting at least quarterly, or touching base with your CPA at least quarterly, making sure everything's on track. So you meet with the CPA less often, but they can help you sit down and plan out your future. And then if you have tax planning services, either with that firm or a different firm, that's something you should do at least yearly, ideally at least quarterly as well. But how are you doing? How are you implementing the plan? How are things moving forward? A corporate attorney and even a tax attorney, you might meet with them once every few years. But if you have questions and you need advice, don't be afraid to reach out to them, because they're all part of your professional team to support you as a business owner, make sure your business is successful. So don't hesitate to call if you have questions, and I hope you all have a great day.